place I've ever been.
Hello guys, welcome back to another lovely trading video. In this one I'm going to be showing you how you can use trend lines to predict breakouts, how you can enter them, where you can look to exit, and just all that kind of stuff. I'm going to try and make it simple just so it's easy to understand, but we'll get straight into it. So we'll use large cap stocks. Okay, we'll go to AMD first because it's the top one there, and I'll be showing you how to do them. So firstly, I'll be going over, actually AMD is a great example because it kind of shows you what to look for and what not to. So you can see at the beginning of the day we had a really sharp rise, and when you see a rise like that, there's no point even drawing trend lines because they most likely won't follow, because we can do a quick example here. If you draw them like this, you go to this pullback here, you can see not followed. You go to this one, that's a bit more followed. Reason for that is it's now not as steep of a move. However, I still wouldn't be looking for that because it's still just a very steep move. I'd be looking to start my trend line once the pullbacks are a bit stronger and once we're not just got crazy momentum going up. So now we'll look at it from this way, and I would start looking to be doing my trend lines at this move here, because again, even if we did it from here, that's still a relatively sharp momentum curve, so the trend line most likely isn't going to hold. However, from this one it pulled back quite a bit, and so we know if we get one more pullback that pulls back quite a bit, that it's starting to show that momentum's weaker and we're actually getting closer to this breakout, most likely to the other side. So here we will draw this trend, and this is what I would have done in the live market. I think I actually even did. You have to check out the recap. I think I even traded AMD. And so this is now where my trend line would be, and then obviously you would extend this out until we pull back to test it for a third time. So now my line's drawn like that. Here we came back, we didn't quite hit it, but that doesn't matter if you're trying to trade a breakout. If you're trying to trade it as a support, maybe you would have entered here. Pulled back again, new a high. This time it pulled back, hit kind of the line, pulled back up, and kind of now broke through. Now this is how I look to trade breakouts. I don't look for the initial break through, I wait for the retest. So on this one, for example, here, you know, we kind of broke through, kind of retraced. It's nothing too clean. This is the move I'd be looking to trade. So now we pulled back down, I'll be looking for a retest of this trend line. So I'd be looking to short around this area here with a relatively tight stop, nothing too crazy, but around the next area of resistance. So to me, that's this area here. So let me draw a line here, and the reason for this, I'll move this over to the side actually because this is a chart we care about. The reason for this is here it was a top here, pulled back, we got several candles of consolidation around here, and so that's why, because nowhere else here, unless you're going for a high, but that's a relatively big area to have, there's no other really key resistances. I guess you could have picked this area if you want to be quite conservative, but that didn't really allow much move to the breakout. As you can kind of see here, it didn't really allow much movement. If it broke through, we would have got stopped out as well if we did that kind of stop, but that would have only been like 4 cents, which, especially on a stock like AMD where, you know, it's relatively high priced, 4 cents is not enough. You need at least 10 to 30 cents. And in this move we would have had 10 cents, which again isn't still crazy, so you could quite easily have put your stop up here and have it around 30 cents, would have been perfectly fine. But that's how I would trade it. So I'd be short here at around 38.18, I mean 83.18, and then we would look at where my stop loss is. My stop loss is around 13 cents. So then what I'd be looking to do is have my first profit at 13 cents. So it's a 1-to-1 risk ratio. Then what I would do is maybe close out 50% of my position here, and then have a break even stop now here. So if it moved back here, we would have made profit on 50% of it and broken even on the rest of it. In this example, it retraced near enough to our break even, but yet didn't quite hit it. It missed by a cent, which was quite nice. So we wouldn't have got stopped out, and then our next target Depends if you're looking for a 1.5 or a 2 ratio. But if you're looking for, 1.5, so here you got the original 13 cents. If you're looking for a 1 risk to 2 reward, then you're looking for a profit target of around here. If you're doing it straight off numbers. However, another way you can look for targets is going off resistance levels, or peak levels you've seen before. So here we had a peak here, we got a pullback. Again, we had another peak here, pullback. However, you can see when we did this pullback, we pulled back to here. So this is kind of a basic level kind of support we could run into, and it's a place where I would personally be looking into some some support, and probably be looking to get out of the position around this area. As you can see here, we did end up actually getting a bit of a hiccup around it, did end up breaking through it, but again, this is where I would have probably closed out the majority of my position, because compared to the risk to reward, it's still a massive amount of difference. So you can see we were risking 12-13 cents. This move here was around 30 to 33 cents or so. So again, that was still risk to reward. That would be a good trade, and there shows to be some resistance. And again, it's the bottom of the original pullback of our trend line. So again, it's a good indication that it could get a bounce here. In this case, it didn't. It broke through. So that was like kind of the first example. We'll go over some more on some different stocks, on ones I didn't even trade or didn't even look at. Oh, actually, one last thing as well. Once you have these trend lines built, you'll see they'll be followed throughout the day. Again, we won't really trade it again, but you can kind of see, obviously we shorted here, came back at the end of the day and nearly hit it. So this is more if you're maybe long for some reason. If you're trading another strategy, this can just always be an indication of where to sell in the future. But that's not too much on what we're going to be trading. It's just a helpful tip. So jpmorgan, didn't trade it, but it's a stock I like. So again, let's go into any obvious trends here. Too sharp of a downtrend to even bother placing a resistance. Most likely not going to follow, but if you did, let's see what would have happened. Let's say you had one there. In this case, you kind of got a breakout, but I wouldn't have traded that. It just doesn't show me anything about it. You can see it didn't even come back to how I enter my breakouts on the retest. I guess it did actually kind of here, but again, I wouldn't have traded that because the trend line is just not really strong enough. Again, if you were someone who maybe drew your trend line like this, again, it's just too kind of sharp of a movement to kind of allow you to get any real action. So where I would be looking is for two types of trend lines now. Firstly, you could either be looking at a high onto here and to get this kind of break. And you can kind of see it kind of worked. It tapped here, pulled back, broke through, kind of got some hesitation here, kind of pulled back and then broke out. So that would have worked perfectly fine, and you can do that. You can also we'll just remove this and do a new one. You can also do it again like how we did on AMD, is from the new movement. So we kind of did some pullbacks around here, and again we could have maybe drawn the trend line at the time. We would have drawn it like that. It wasn't too sharp down, so that was fine. And the trend line again actually here may have been a trade. We may have went long here coming into the trend line, and on this one unfortunately we would have got stopped out if you took this trade, but it probably would have looked like a good trade in a live market. I only almost missed this when drawing it now because we're seeing it in hindsight, but in a live market this probably would have been a trade. It looked quite clean. The only reason we may have not got into it is because we had quite a lot of red candles coming into our buy zone. So that would have been more, you make that judgment in a live market. However, seeing it after, again, we get a new trend line when we did this mini breakout here and made a new high. So here we get a new breakout. And let's see how this one reacted. So we tapped it here. We ended up getting a pullback. And then again, hesitation on it. We broke through, pulled back. And this again is, if we were trading it, where my entry would be looking at around $155.20. Let's see where we would put our stop. Our stop would most likely be around this area. It was the first area that my eyes got caught on because we struggled here, it's where these candles pull back several times. So to me, that shows like a good support area. So let me draw a line here so you know where my potential buy zone, stop loss would be, and this would be our entry. So we are risking 12 cents again, so a small move on such a high price stock, but again, this allows you to do really good risk to reward, because even if you're only right 50% of the time on these kind of moves, you could have, you know, a 1 to 5 risk ratio, because usually they keep their trends strong. In this case, we pulled back, let's say 12% is our max risk, so let's say we had 100 shares, it's only a $12 risk. Again, we took some profit, let's say here, in this move here, and now we have our break-even stop. So we're out half of the position, we got a break-even stop of here, so no matter what happens, we now don't lose money. And then let's say we then had the rest of it at a 2 to 1 ratio, so we were risking 12 cents, we're looking for 24 cents, so this is where we maybe cover the rest of our position, and again, worked quite well. Again, obviously in this move it moved quite excessive, usually won't move this much after these kind of breakouts, but it does show you that you can kind of allow for bigger risk if you don't want to immediately close your other half of the position at the 2 to 1 ratio. You could maybe just always have a trailing stop or something like that, whatever you feel comfortable with. Again, this is, with trading, you always have to find what works for you. The basics are the same, no matter what markets you trade. However, some things are different, like trend lines. People draw trend lines differently. So you kind of just have to, you know, you may watch this video, you may go and watch someone else's, you may find theirs works better than mine, you may find mine works better than theirs. It's all preference in trading, so you kind of just have to find what you like. We'll go through one more example on any kind of stock. Let's say Tesla. It's a big traded stock. See what happens on here, and even if we have any trends. So okay, Tesla was down 1%. Here, this one I'm not too sure. Actually, it does look quite steep. Let's see if it like that. Okay, actually like this, it doesn't look too steep. So this most likely would have been a trend we drew. So let's say we drew it, tapped here again, got near here, but then didn't hit it exactly, but that doesn't matter. And this time came back, and this time kind of broke through, but you can kind of see we got our hesitation here. This does kind of show if it doesn't break out immediately, at least the trend is kind of respected, because that means people are both buying and selling, maybe covering profits or looking to get into their position. That's why you kind of get that. So this trend line's been drawn. Again, I don't trade until the retracement. So let's say we went along here. Again, this was the same thing on the original jpmorgan trade. You're followed by lots of red candles. This does show you that the entry is most likely weaker than a normal one. So you can keep this in mind again when you do your own testing, seeing what works for you. You'll probably see that this decreases the likelihood of your trade going your way. So if you see a trend like this, and if you're looking to get in like how I do it on a retracement or a pullback, if you're followed by lots of relatively big red candles, it might not be a great trade. So you can see it kind of came back, and we made a lower low before reversing. So if we did have a support on here, it most likely would have just been lower day, because there's no other really resistance areas to draw. So on this one we would have had a relatively bigger breakout area. I'm now lost. Oh, that's why. So yeah, so let's say we had it at our lower day. Oh, so this actually was another problem then. Didn't even see this. Our entry on this retracement was exactly where we would have a stop, because otherwise we don't have any place to place a stop. So again, we might not even shaken that trade, because there's no place to really gauge a support level unless you go down to a whole dollar. So maybe you go down to $670, and you take it on a whole dollar resistance. That may work, but this one wouldn't have looked great. But you can see kind of just how they work. So then we draw a new trend line, because this one ended up breaking, so we ended up drawing a new one. This one didn't end up working. You can see it hit the second time, hit the third, kind of respected it, did break through and then tap back. So again, you might have traded this and had a stop loss around here, but that one doesn't look all that clean, so I most likely wouldn't have traded that myself, but you never know. Looking onto Tesla, we can see another kind of trend forming this way. So again, you're most likely not going to do it from the bottom because it's too sharp of a movement up. So we wait for that first pullback, which is a relatively big pullback. And you know, you may be someone who likes to use Fibonacci. You could maybe use Fibonacci to gauge this pullback. 38.2%, that's relatively good. And that begins your trend line. So again, we started a new trend line here. We got it from here, it tapped back here. Actually, we'll redraw this. Make sure it's perfectly on that line. And so yeah, we then drew it again. Again, you got the same thing. It came back this third time, didn't really bounce off it though, annoyingly. Instead, kind of consolidated here, breakthrough, but never retraced. So on this one, we wouldn't have traded. But it's the same kind of thing across all of these. Doesn't seem to be any more really trends or any that are super clear to me looking at it. So I probably wouldn't have done any more trades on that. But that's like the overall idea on how you can kind of find stop loss areas, how you can trade the breakout, and all that. So I hope that's kind of clear how you can draw the trend lines. Don't bother really trading them, or at least in my opinion, don't bother trading them if it's such a sharp decrease or increase, because they're just not really going to be respected. And again, this works on both long-term time frames, day trading, swing trading, whatever you want to do. And again, you have to filter this out and see what works for you. For me, I like to trade the retracement when it comes back to my trend line, because to me that shows me more of a low risk. I know where I want to stop out, and usually then I've only got, you know, a small amount at risk for a larger profit. But again, you don't then get as many trades, and you don't usually get caught in as much momentum. But that's me. I'm more of a conservative trader, so I take lower risks, and for that I do make less reward. But that is just part of how I trade and what I feel confident with doing. So yeah, you'll probably have to filter this out, see kind of what you like, if you like the retracement, if you don't, and yeah, but this is just so you can kind of see my idea, how I use them. You may end up liking some of it, you may end up using some of it. So I do hope that helps. If you've got any questions, let me know. I'll definitely answer any of them in the comments. And if you, I don't know, maybe need even more help, join the Discord. I'm chatting to all the people in there all the time during trading day, from around, you know, market open till market close. So hope you like that. Hope to see you in Monday's recap, and that's it.